Hey folks, good morning. It's Harry Swaminathan on Thursday morning. Just wanted to catch up on some of our trades. So here we are looking at the Apple first. Apple's moving up a little but seems to have a little bit of resistance. So in this video I want to focus on Apple. As you can see, our 5 contracts is up about $1,200. So at this point, it may be a good idea to protect this profit. Not sell the position, but protect the profit. So one way you can do this is if we go look at the, let's go to the Analyze tab, and if we go to look at Add Simulated Trades, what we can see here is we've got a position in May, which is 99 days away. Let's look at the March series, which has 36 days to expiry, and we have a long call at the 500 level. So let's say if in the March series we went up to perhaps 500 or 510, we can look at 510, and then if you look at 510, I'll change this to 5 contracts because that's what we have open, and I will make this as a I will make this as 510 call. So if we sell 5 contracts of the 510, we can get a credit of 2.36. So now remember, we paid 9.5 for this for our long option, and if you look at its current value, it's 11.95. So it's gone up by $2.50 almost. So now the philosophy of this trade is that we want to reduce this cost basis of 9.5 as much as we can. And so the way we do that is we come here and we look at the March series. So it's a 510 call. So remember, it's above 500. Okay, so this is more like a bull call spread, but only thing is it combines a calendar because we're looking at a different expiry series. So if we sell this this call, and so I'm going to simulate that, you can immediately see that this is what our graph would look like. Okay, so we, if Apple goes down, then we are going to profit from this short call. And so what we would do is, because we believe in the long-term trade, we would take the profit on the short-term short call. So, and then if you see, we still have a positive delta. So even after putting this short call, we still have a positive delta. So which means we are still bullish on Apple, and you can see the graph, it's clearly bullish. So this is a way we can reduce our cost basis. And let's say, of course, we're not going to keep this till expiry, but even if we can squeeze out $1 or $1.50 out of this short option, your long option would have reduced its cost basis by that amount. So that's what we're going to do today, because Apple seems to have a problem moving above that 460 level. So rather than let our profits go on the long call go, get reduced, we are going to cash in on this kind of a trade. So I'm going to put this trade on. You should receive the video in about 15 minutes or so. Anything above 2.25 I think is fine. So you can, if you're interested, you can put the trade. Thank you.